Hey traders, are you concerned about this market? You should be. The Fed raised rates yesterday and pow, the index has gapped down today and just kept right on going. This is an exceptional sign of weakness. And so we're not out of the woods yet, and the bears continue to maul the market. So let's go ahead and get into today's session. We've got some really great stuff to look at. Remember, what we provide is for training purposes. Traders should always pay for trading a new method, probably the risk of their own personal capital. Let's take a look at the charts of the indexes. We'll start here with the S&P. I'm going to blow up today's session, blow this up a little bit. And as you see right here, yesterday's candlestick was kind of a spinning top doji, spinning top type of candlestick, closed like it was going to go back into rally mode after the Fed. But as you look down here and see the TSI did what we'll call a bearish squeeze, popped up a little bit, and then after hours, which we don't see on this chart because this is the chart of the spiders, the market sold off. The market, in reality, didn't like what was going on with the Fed interest rate increase. And so what happens? We gap down today, continue down further. We broke through we broke the past swing low. Where might it go? Well, to keep an eye down here on the 200-week moving average down at the 349 level. Could jump down to there. Also, I would not be surprised to see a reversal within the next 1 to 4 days, but I'll treat that just as a relief rally to give me some opportunity to get into some downside trades. So that's what we're looking at with the S&P. What about the NASDAQ, the Qs? Let's take a look at the Qs. Similar picture here on the Qs. We took out the low from Tuesday. Price action continued to move down. Again, we're getting some momentum indicators like the market forecast, two-line cluster. The TSI is in the lower, towards the lower reversal zone, so it is oversold. We can become more oversold. I am keeping an eye, like I said, I'm keeping extra, keeping an eye here on this 200-week moving average. If that breaks and we get a close below that, we are probably heading down much lower from where we are right now. Remember the lows from 2020 down here? That becomes a really interesting target where price action could move down to that level, somewhere between 177. Okay, and what about the NASDAQ? NASDAQ is the Russell. What about the Russell IWM? Russell had been holding up better than the other indexes, but now it's taken out the low from Tuesday again and is continuing to fall. It has closed and is now below the weekly downturn, 200-week moving average. That's a sign of weakness. Could we go on down here and hit these lower levels? Sure. We're approaching a couple of very interesting points in the market. One, we're approaching the end of June, which will be the end of the quarter. I encourage you to go over, take a look at as you can see, I don't have that up there. What are the quarterly charts look like? As you can see, that will finish up in a couple of weeks here for all of the indexes and all the stocks. But look at this. This is a significant sell-off for the second quarter of this year. Here was the first quarter. And one thing to take away from the quarterly, you can pull something from every time frame of stock. What has it done in the past? Usually it will have a quarterly move, down or up, and then retrace the next quarter into about the midsection, middle third of that candlestick. And so if that happens with this particular time frame, where does that put us at? And again, I will just draw a line across here, give you a ballpark number. There it is. And that corresponds with, as you can see, what that does is that gives us a target where I would not be surprised to see price action pull up towards that area and then reverse from there mid-quarter or mid-month. Remember, a quarter is 3 months, and so that could be a 12-week process to get back up there. But that, you know, having that on there and have it marked will give us something to look forward to in the future. So where to from here, guys? A couple of different projections down to the downside. Let's take this one on the, I'll take the one projection on the Russell and just throw the Fibonacci's on here. I'm going to go here to this low here, up to this low high here. And what that gives us a projection down. Here would be a 100% move or of this symmetric move from this low to that high. That would give us to put us down at 146.86 on the Russell. If you're trading the TNA and doing options on TNA, where would that put us on TNA? Well, that would put us on TNA a lot lower. Again, I'll just grab this here, back up to that high, and that puts TNA down at $19. $19, guys. And then TZA, we do the flip-flop of TZA. So TZA, go ahead and just draw that in here, right there. The 100% mark is up here. It's about $58. And the two, no, I'm sorry. It's already hit the 100. That would put it up there at $68.88. So just keep your eye open. Now, the question I have, and I wanted to leave you guys, leave everybody with, is, well, what do you do if, you know, how do you handle waiting? You know, Jesse Livermore once said, you know, you buy right, just sit tight. He said he made most of his money while he was waiting, not rather jumping in and out of trades. And so part of the thing is have a setup in your mind already. And I use a setup, and so what I could say is just wait for the setup, but you have to have a picture in your mind of what the setup is that you've reviewed, you've rehearsed, you've gone into the charts, you know what it looks like. And so use an objective setup. I use what I call my 3-step setup routine. And this is for the bullish chart. Here's the things I wait for. It makes a very short checklist to make sure that I'm not jumping into a trade too soon. 1, I wait for price action to be near or at past support. And to do that, I look to the left. And if I look to the left and find where there has been a past consolidation area or a place where you've broken out, that can count as support. 2, I wait for a candlestick reversal pattern. That can be a hammer. That can be a bullish engulfing. That can be a piercing line. And in some cases, that can be a gap and go. All of that on the, so that's number 2. And if either of those two have happened, then, and or both of them have happened, then I wait for number 3, which is I wait for a positive shift in momentum. I use, of course, the True Strength Index, and I'm looking for a reversal on the True Strength Index from the oversold position. So in the market conditions the way they are right now, that's what we're waiting for before we take a long position. So remember, if there is no setup, there is no trade. 2, be right and sit tight, as Jesse Livermore would say. So aloha, God bless. Tune in tomorrow for Trade Your Way to Wealth. That's over on the YouTube channel. You can get there for a live stream, or if you become an active trend trading and opt into our watch list that we put out every week, you'll get a personal invite for the Zoom meeting for that same live stream. So aloha, God bless everybody. Stay safe, stay sane, and wait for your setups.